What is up, everyone? Welcome to our Fundraising News Podcast, episode 142, Follow the Fundraising. We have Matt back in the studio, and I have to tell you, Matt, it's great to have you back.
Always a pleasure to be here. Excited. Let's jump in.
So for job changes, Hennessy Stewart transitioned to CapTrust Advisors as Vice President and Financial Advisor, bringing his experience in wealth management and client advisory from Virginia Asset Management. Based in Raleigh, he serves as a generalist, guiding individuals, families, and businesses through their financial journeys with a focus on helping clients find security and purpose in their decisions. Hennessy studied civil engineering at North Carolina State University, where he was a member of the swim and dive team. Peter Craig transitioned to LPL from Osaiqua. And by the way, Peter, that's just a great name. I think we can all agree on that.
Some might say it's a common name. What are your thoughts on that?
I just think it's a great name. I don't know.
Okay.
But bringing his expertise in wealth management, financial planning, and insurance solutions to his role as a certified financial planner. Based in the New York City metro area, he serves as a generalist, helping clients, including business owners and pre-retirees, navigate their financial goals with tailored strategies. And I think it's this idea too of kind of fulfilling a big task in this country, and a very noble task of helping small business owners and business owners navigate financial decisions, and retirees, being able to retire in a fiscally responsible and financially secure manner. And also, he holds an undergraduate degree from Coastal Carolina University and is dedicated to guiding clients towards financial liberty via personalized long-term planning and comprehensive advisory services. Emily Sanders transitioned to Morgan Stanley from Trail, Montana and Associates, bringing her experience in client relationship management and portfolio support to her role as a portfolio management associate. Based in San Antonio, she serves as a generalist, focusing on delivering personalized service and strategic financial guidance to clients. She holds a postgraduate degree from Kaplan University and a Bachelor's of Arts from the University of Texas at Austin. Emily's commitments to client success and her strong educational foundation make her a valuable contributor within the financial services industry.
Love it. Yeah, wishing them the best. We can go on a similar route with RIAs, financial advisors, just tracking some of the M&A. We did actually publish our RIA channel update for the month of September. So Dakota Insights on our website. Just check out the RIA Insights section. Check it out. And you're going to see the most recent consolidation from the past month. But one thing to call out here, former Commonwealth Financial Affiliated Advisors Austin Luedtke, apologies if I pronounced that incorrectly, and his brother Robert registered Luedtke Associates as an RIA with the SEC. Austin, Robert, either brothers, or we're looking at a father-son relationship. It has to be one or the other is my guess, but we'll leave it at that. The Wisconsin-based firm has partnered with Charles Schwab for a number of different services. Another one to call out here, Mercer Global Advisors acquired LA-based SB Capital Wealth Management, a $1.2 billion RIA. SB joins Mercer's ultra-high net worth focused Regis Group as the cornerstone of a new specialized practice serving media and entertainment professionals. And then the third one to call out here, KKR-backed and California, specifically Newport Beach-based RIA, Beacon Pointe Advisors acquired the family firm, an $857 million RIA out of Bethesda, Maryland. And partners and advisors Kate Fries and Stacy Bacree join in this deal, which closed in September and brings Beacon Pointe's client assets to around $49 billion. So let's always make sure to track that. Like we said, Dakota Insights, you can find it in Marketplace as well. All of this consolidation, M&A activity, it's important to stay on top of it, especially in the fundraising world. So let's go from intermediary to institutional. Let's dive into some investments that we've been tracking.
And and thank you for that, Matt. And I think one thing that really is significant for me here is really, I think this illustrates how the RIA, it's just booming, and it's just a budding area. But I think there's a lot of rolling up because I think people see the competition. So right now, I feel like they're trying to roll up before and consolidate before competition really becomes robust. Mm-hmm. And so taking it to investments. So the El Paso Firemen and Policemen's Pension Fund adopted Mix 2 from its 5-year asset liability study, reducing the portfolio's private equity allocation from 15% to 12.5%, and reallocating the 2.5 percentage points to senior direct lending. Additionally, the pension approved a $10 million commitment to Ridgemont Equity Partners 5, pending legal review. And I think that's interesting here because obviously it's going from private equity to private credit, so it's still private markets. But, what do you think that says about the private equity versus private credit allocation dispute, in your opinion, Matt?
Yeah, what I'm seeing is I think both asset classes across alts are very, very, very topical. Private equity continues to receive a ton of allocations. Reporting against this in Marketplace all day. For our clients, I'd say PE is always higher from a total fund value perspective than private credit. But, you have private credit firms like Golub, Blue Owl that are continuing just to kind of skyrocket and take off. So, both are going to continue, to receive capital, receive allocations. But I think it's some of the other investment opportunities in alts that we just got to keep our eye on, like real estate, real assets, what's going to happen there as PE and PC continues to dominate.
No, definitely. And it's going to be interesting too, because I think there's a huge push to streamline the going public process. And I think there is a push for greater regulatory oversight from private equity and private credit. So it's going to be interesting to see how alternative assets mature and react to that. But now we're going to talk about the Pennsylvania State Employees Retirement System made new commitments totaling $250 million, made up of $100 million to Blue Owl Fund Real Estate Fund 7, as a follow-on investment in real estate, and $100 million to HarborVest Dover Street Fund 12 and private equity secondaries, with another $50 million to the fund's co-investment vehicle Secondary Overflow Fund 6. And then for our last investment, Wyoming State Loan Investment Board, they approved recommendations by investment staff and RVK to commit $130 million to Banner Ridge Secondary Fund 6 as a part of its private equity allocation, and voted to replace underperforming Harding Loevner with MS Investment Management as international equity manager. For searches, we are going to be talking about a pension fund that actually takes place in my hometown county. Matt, take us off, please.
So Newcastle County employees pension, right around $517 million in assets under management, working with NEPC as a consultant. They have agreed to invite Ancora and independent franchise partners to present at its September meeting as part of its plans to replace its current U.S. large cap value manager. So September meeting, I'm sure it's already passed, of course, since we're in October, but we will get more information in terms of how those discussions went during the next board meeting. And then a few others to note here. You can find this in Marketplace in the searches drop down. A couple pacing allocation plans that are going to go through 2026. We have San Fran ERS just dropped their private equity pacing allocation plan, which is looking like a pretty big number, $1.1 billion in total commitments that they want to allocate out, target allocation of 20%. It's the mix roughly out of that 1.1 billion is going to be 50% towards buyouts, 25% towards venture, and 25% towards growth equity. So we pulled that info from the San Fran ERS board meeting on September 10th. And as I said, that's going to go through December 31st of 2026. And then we do have one other to call out here. I believe it is also with the San Fran ERS. It's their real assets pacing allocation plan. So quick thing to note here, very similar deadline, timeline through 2026, December 31st there. But they're looking to allocate $550 million in commitments to real assets, which a target allocation of 10% of their portfolio. The allocation mix, 70% real estate, 20% infrastructure, 10% natural resources there. So let's wrap it all up here with breaking down what this all means from a GP, LP perspective here, Peter, and then we can close it out.
Of course. So I think just some strategic implications here. Obviously, Matt, I feel like we've discussed this extensively about the RIA consolidation, but there's a couple other key points. So allocators are prioritizing liquidity and downside protection, and this is evidenced across public and private markets. Institutional investors are really trying to reposition for a world where cash flow and flexibility matter more than liquidity premiums. And then secondly, secondary and continuation funds are now mainstream portfolio tools. And this is this was seen in Maine Capital's continuation vehicle and Wyoming's $130 million commitment to Banner Ridge. And it just really underscores how secondaries are no longer a niche intricacy. And then last but not least, the energy transition has graduated from a thematic bet to a capital market pillar. I think right now there's a huge push for clean energy, nuclear, geothermal, grid modernization, and also really energy that helps. I mean, right now the demand for energy is just insatiable, especially with these data centers. I feel like there's just a huge push for electrification. What's the bottom line here? Capital formation in late 2025 is increasingly defined by what Matt calls the 3 C's: control, clarity, and conviction. LPs want flexibility and liquidity. GPs who can deliver yield, access, and transparency are winning. Whether it's secondaries, credit, or transition infrastructure, the next fundraising cycle won't be about chasing scale. It'll be about offering durable, cash-generating exposure that fits this new institutional mindset.
I think it's just the tip of the iceberg with that. And a couple things to note outside of what we were just talking about, events, webinars, happy hours, got the calendar up here. We had our Denver event the other night, which I heard was fantastic out in Cherry Creek. So I'm sure we'll be back in Denver sometime in 2026, early 2026. We do have San Fran next week on the 14th. We have our Emerging Manager Growth Show airing as well next week on the 14th at 1 p.m. Eastern time. Our 273rd Dakota Live Call, which actually is a great kind of mix of segments. We've got an RIA joining us for an interview. We're breaking down a platform. And then I believe we are dissecting Atlanta for the metro area breakdown. But that will be next Friday, the 17th at 11 a.m. And then our next Dakota Way sales coaching, Guy, Tim Dolan, right, members of our fundraising team joining Guy to talk about fundraising best practices. That is going to be on October 23rd. So for all these, just go to dakota.com, go to resources. You'll see each webinar broken out, and you can register for those right there. A couple other cocktails, Toronto and New York, both on October 28th. So if you're going to be in one of those cities, please join us. And with that, I think that's a good ending point. We will see you all next week for another episode of the Fundraising News Podcast.
I'm excited.
Peter, thank you.
Thank you.
Always.
Matt.
This episode is brought to you by Dakota Marketplace. Are you tired of constantly jumping between multiple databases and channels to find the right investment opportunities? Introducing Dakota Marketplace, the comprehensive institutional and intermediate database built by fundraisers for fundraisers. With Dakota Marketplace, you'll have access to all channels and asset classes in one place, saving you time and streamlining your fundraising process. Say goodbye to the frustration of searching through multiple databases, websites, Form ADVs, and say hello to a seamless and efficient fundraising experience. Sign up now and see the difference Dakota Marketplace can make for you. Visit dakota.com/Dakota-Marketplace today.